Hello, my name is True Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Hello, everybody. This is True Demon, the Devil's Stockbroker, and I'm coming to do a quick analysis on AMC. But before we get to that, I wanted to make a very clear statement because there's been some division amongst the community that has been kind of upsetting me a little bit, and that is that everyone is still hyped on this idea that AMC is going to $100,000 or $10,000 or whatever absurd amount, and they are insisting that anyone who says otherwise is against the squeeze or a shill or a hedge fund, whatever bucket. So I'm here to let everybody know that Trey is right. If you subscribe to the theory that any stock, I don't care what stock it is, that has a share count of more than 500 million shares in circulation can go to any amount that even approaches $100,000, you are subscribing to a delusion. And I am sorry to put it so bluntly, but it is outside of the realm of reality. And I am happy to explain to you why, because I want everybody to understand that jumping into this cult like mentality is extremely dangerous and it's detrimental to you. It is not healthy to think that something just by willing it forward alone will make it so. You cannot will a stock to 100,000 or 500,000 or anything. It happens with basic principles of supply and demand. The reason why AMC squeezed or GameStop squeezed in the first place is because there was a very necessary equilibrium of supply and demand that was being broken. GameStop squeezed in January because there was a massive demand for shorts that was farther than what the supply could provide. There was not enough shares to go around to short the company, so the institutions that resorted to shorting it to the extent that they did overextended themselves through the practice of naked shorting. Essentially, everybody at this point knows or understands, or at least somewhat understands this, but the principle of naked shorting, selling a stock that you haven't borrowed, is prevalent in the market, and we know that it is illegal, and we know that it happens every day. And that creates a certain supply and demand issue. It inflates the supply of the stock. But on the other end of that spectrum, if the stock goes against the naked short positions and they are put in a vice, essentially, where they must go back and get shares in order to close their position because they are being required to by the broker who gave them those shares to borrow that didn't actually exist. It puts them in a supply crisis. They must get the shares and they must do it quickly. That decision is what drives the price. And there is no way, there is no feasible way for any stock to do that. It will never be able to reach those unattainable prices of 500,000 or 100,000 or even 10,000. And that's why I'm standing with Trey's trades on this issue, because there are too many people who are that convinced that that is even possible. It's dangerous and it is delusional. I'm just going to be blunt. I want to put it to everybody who is looking at this video and is absolutely no doubt screaming in my face and going to fill the comments section with all kinds of garbage like I'm a shill and I'm a hedgie and I'm betraying the entire movement. Just shut up and listen to me for a second, okay? Just fucking listen. The market capitalization of AMC right now is $6 billion. Okay. That is a multiple of their current share price by their current float, or their outstanding shares in this case. Okay. I'm just going to work with round numbers because it's very simple, very easy math. And when we're working with these ridiculously huge numbers, it's only at this point that it doesn't really matter, like the decimals. So let's just round it down to 500 million shares. We know there's more shares of AMC than that, fine. But 500 million, we'll just work with that number. In order to get the market capitalization of a company, you multiply the number of shares outstanding by its price. Okay. Even if AMC were to go to $100,000, that would be $50 trillion. Does anybody else even understand what $50 trillion looks like? That's almost twice. That is more than 1.5 times the entire United States national debt. That is if we took all of the debt of our entire nation of the United States, the richest country in the world, and multiplied it by 1.5, and it would still not even touch this number. The stock market right now, because the Fed is talking about unrolling a balance sheet of $9 trillion, is sick as a dog. And we're looking at a potential crash that would bring the entire stock market all the way back down to $200 on the SPY. And that's with $9 trillion. The entire stock market overall is only worth like just less than $40 trillion. You need to really, really capture this number and understand how unfathomably huge it is, that even if there was this much money in AMC to drive it to this price of $100,000, AMC would be worth more than the entire gross domestic product of the country multiple times over. That means that AMC would be worth more than the United States itself. Like, really think about that and understand how absurd that idea sounds, okay? There aren't enough printed US dollars in existence. Hell, there's not even enough printed currency of any currency to satisfy this number. If we even take away 1 0, that's still $5 trillion. That's still half of the entire Fed's balance sheet. So you want to expect me to believe that AMC, even though I love the company, even though I believe that it's a fantastic company that's been abused and shorted down into oblivion, is somehow going to be worth half of the entire Federal Reserve balance sheet? You're out of your mind. There's just no feasible way for these numbers to be reached, because in order to drive a stock to those heights, somebody has to be buying it at those levels to drive it to that price. That to drive AMC's stock even to $1,000, people would have to be buying it zigzagging all the way up from 13 to 14 to 15 to 20 to 25 to 50 to 100 to 1,000 to 10,000 to get it there. I don't care how many naked shorts there are against the company. It's not feasible because no brokerage in existence, even all the brokerages that deal in the United States securities market, could ever possibly drive the price to such a height. They would shut down trading. Okay? It would just stop being traded. There is no feasible way for these prices to be reached. So let's stop selling people this snake oil, and let's stop being so damn bullheaded on this idea of $100,000. It honestly, it's upsetting to me that this many people are so convinced that we're going to get to this level when there's no justification. There's just no justification that we could ever see prices like this. If you're really that determined, I'm sorry, but like you're out of your mind. $500 billion if the company went to 1,000. That would cause AMC, a movie theater company, to be worth about half of what Apple was worth at its highest point. Apple was the first company in existence to break $1 trillion market cap ever. That only just happened in the last year after this euphoric rally that brought us from the COVID pandemic over the course of over a year and a half all the way up to $480 at the highest point on the SPY. So let's stop being ridiculous. Let's stop being childish and stop subscribing to this theory of $100,000, and let's actually be a little bit realistic here for a second, okay? Let's actually work with some numbers that make some kind of sense, and then we can actually give people reasonable expectations and understand the charts and understand where a company like this can go to in the event of a short squeeze if we're right. And even after all of this research and all of this time spent working to build this thesis, we still have to work within the realm of reality. You're not going to will a stock to $1,000. You're not even going to will it to 100. It requires something a little bit more than that. But let's actually talk about what the possibilities are in a situation like this for a company like this who has been maliciously shorted so much. So over here I've got AMC on a timeline that I have been analyzing basically since the first move in January and after the second big move that took place in late May and early June of last year. So out of all of AMC's price action, the one thing that was consistent in predicting huge moves in AMC was always related to short exempts, as far as I've been able to tell. There's been certain points in its price action where AMC couldn't break below, and it wasn't able to be pushed down below certain levels of support once the momentum from the retail movement and the retail euphoria kicked in and brought AMC to its euphoric highs at $70. And right now, we have been testing and consistently maintaining those levels ever since then. And that level is at approximately $9. So AMC got shaken out from $70, and a lot of retailers got swept up and bought up at these euphoric highs, myself included, because I myself am still just an amateur investor trying to figure all of this out. I've taken a lot of time to go back and reanalyze all of my past analysis and reconsider all of the possibilities in my previous theories. And there are some things that I think are still correct, because there are still certain things, there are certain rules and certain signals that the stock market obeys. So AMC previously, back in January, had this period of consolidation to the downside, going slowly down further and further to a level of roughly $2.30 in January, right before it made a huge squeeze and it made a big move along with GameStop. There was a big sympathy move with GameStop. And part of what signaled that was a jump in the volume, this big buying volume that moved the price from its previous low points at $2.20 up to $2.80, $3.20, and so on, and kept moving the price up. And during that time period, the volume was spiking significantly, so it kept driving the price higher and higher. Throughout the trading period from late March to early May, AMC was consistently consolidating in this wedge, this symmetrical triangle that we saw here, and for the first time, it had broken below it right here at this point in early May. And we can see that on the OBV, the volume was still very low, but it dragged the OBV down below this symmetrical wedge that formed on the OBV. And then once again, there was this big surge of buying volume that preceded a huge move to the upside. OBV signaled this. We call this bullish divergence, where the price, even though it is going lower or consolidating sideways, the OBV is rising rapidly. And we saw this huge break of resistance on May 13th with this huge green candle that drove the price up even higher. And as the price continued rising and then retraced, OBV was still at its highest highs at that point on the chart. From June all the way until March, AMC continuously moved down in this big bearish channel or falling wedge, however you like to look at it. Over time, the price continuously declined. But even after declining to this level, it has yet to break below its previous low points or its previous higher lows back here in late May of 2021. These areas at $10 and $12. It just rejects those levels every single time that it touches them. So the lowest that we had ever gotten was $9.70, and AMC clearly rejected it here. So every time we get this similar price action with AMC, these big pennants on the OBV, we see the price continuously breaking down lower and lower, but the OBV doesn't really move to reflect that. Every time there's a huge move up, the OBV goes up, but when the price is moving down, the OBV is typically very sideways or it moves down only very slightly. I've talked about this on my channel before, but a big part of this, I think, is algorithmic trading because they target AMC and stocks like this during low volume hours. They're able to use a very small amount of volume to get big price action to the downside. And panic is a huge driver of stock prices. It's easier to move a stock down than it is to push it up. So those are a couple of ways that you could explain this kind of price action, and also give yourself some signs that a move is coming. So we had the first ripple, which honestly I had thought was the first big move that AMC was going to make as a part of a larger move, but that didn't play out. But all the same, we saw this huge significant bullish momentum where AMC made a large move all the way from a low of $13.17 up to a high of $34.33. And then again, we consolidated or retraced and consolidated to the downside. Now that we have gotten a lower low in the price, we still have a higher high in the OBV, or higher lows in the OBV. This is bullish divergence on the OBV. It's the same situation. You can look at Rsi divergence kind of in the same way. You can see that AMC had reached its lowest point on the RSI on the daily chart here when the price was at $14.52 at the time that it closed, and the RSI was down at roughly a value of 17.5 or 17.75. Now AMC has bounced off of two repeating price levels at 25 on the RSI and again at 32 on the RSI. This is bullish divergence on the RSI as well. Each time that this happens, this is a signal to algorithms and also to day traders that there is a bullish move incoming on the stock. So this is some basic TA that you can use to kind of tell yourself, okay, we expect the stock to move to the upside in the near term just because we're seeing these repeated lower lows in the price but higher lows on the RSI and also on the OBV. Next, I want to point out a few things that our ScourgeBot tool pointed out to us when it triggered a signal on AMC indicating that a bullish move or at least some volatility was going to be coming into the stock. So this is a recent clip of the FINRA data and also ScourgeBot's analysis on AMC. I know it's a little bit hard to read, but I'll kind of try to interpret some of the data based on my thesis for AMC and other short squeezes and try to give some clarification. So during this period where AMC's price was continuously moving up after it had hit low, after it bounced off of its lows at like $10.40 or so, or or $10.30 as we see here. There was a significant move in short exempt volume. And if you're not familiar, short exempts is when the market maker will take a short exempt, or a short which is exempt from the locate rule, in order to take a short, borrow a stock that doesn't actually exist, and locate it later on. They get 6 days to do that. And that is legal for them to do that, and it's order for them to maintain market fluidity and liquidity. They're able to sell a stock short without locating a share to borrow for a limited time only, so that they can provide that share to somebody who is looking to purchase it. The market maker is then able to go back into the market at a later time, up to T plus 6 days, in order to go and collect that stock before it fails to deliver. And after that, they have 2 days to cover. So for a total of T plus 8, that's roughly when they start to hit their point of no return. And if they get too many FTDs, then they receive, fines, slap on the wrist, whatever you want to call it. It's kind of meaningless. It's a bit more like just like a cost of doing business for them. But in these situations, if the stock continuously moves against them, then they never have the opportunity to cover the stock at a lower price. And that's actually the situation that we're having right now. So you can see that the short exempt volume is quite high, as is the short volume overall, while AMC is moving up. And the stock got pushed down a little bit in the past several days, but the short exempt ratio, the number of short exempts versus short volume, is quite high. I found that above 2.5–3% is kind of that sweet spot where it indicates that market makers are having some significant trouble maintaining control of the price. And it is widely accepted in market mechanics that the market makers are who determines the price, because most of their order flow is what actually affects the stock price. Now, if they're continuously having to take short exempts, those being shorts that have not been located, and the price keeps going up anyway, kind of like it was doing here during this time period, going from 1188 to 1223 to 1443. Those short exempts are now further and further and further away from their price target that would leave the market maker able to cover that stock at a net profit rather than a loss. And that kind of puts them in a bad situation, because their objective is not to take a directional position on the stock, but rather to take a short-term position in order to fulfill orders and close the trade as quickly as possible and remain net neutral, making profit along the way. If the market maker is not able to do that, if they get trapped in a directional position, then they will eventually have to make up that inventory. And it's much easier for a market maker to get stuck in a short position, because those are the shares that are more difficult to locate, especially in the case of AMC, which is now widely considered to be a hard-to-borrow stock. Let's keep going a little bit further and get into the second part of my thesis, which shows that the 5-day simple moving average, or smooth moving average, is climbing at a rate of roughly 4.5%. Now, it's not quite to the level that I'd like to see, but I found that once a stock is moving at a 5% rate of incline, or the smooth moving average on a 5-day time period is increasing 5% at a time, that indicates that there is consistent momentum moving the stock up to the upside. So here, this thick white line is the smooth moving average on a 5-day period. You see it kind of it moves pretty closely with the price. And during this time period, the smooth moving average consistently moved up by about a 4.5 or 4% rate of incline during this time period, and now it's consolidating sideways. Now, if we get another move like this again, where AMC breaks up past $13, $14, $15, then that will also continuously push up this smooth moving average to the upside. Now, if I continue to see the short exempts climb or increase significantly, indicating that market makers are still trying to control the price through short exempting the stock and selling it down, providing buy orders and fulfilling buy orders with stocks that they have not located, then I will take that as a signal that the market makers are losing control and they're also having trouble borrowing the stock. We can also corroborate some of this data with Ortex. So for the Ortex data, we're going to take a brief look at what the shorts are doing versus what the price is doing. We can see that during this time period from December of 2021 onward, while the shorts were going up, the price was consistently moving down. But at some point, eventually, after the shorts had hit after the price had hit a area of stiff resistance and support, shorts kind of got stuck. And even though the shorts increased for a little while, the price didn't really consistently move down. Let's also take a look at the shares on loan. Now we can see that the shares on loan increase very rapidly. Shares kept getting borrowed consistently all throughout this price action, and recently it's had this huge spike up in shares on loan, all the way up to 181.87 million shares. That's a little bit more than 32% of the total float for AMC. That's quite a significant number. So with AMC's price hitting this bottom area and continuously resisting or lifting the price up and refusing to let it break down below this low level at $10, it's a signal that market makers have been continuously trying to cover these positions at a lower price in order to get out of these short positions. And what they're having to do is, in order to fulfill buy orders, they're continuously having to borrow more and more and more and more stock in order to deliver those, because they run out of time on those shares that they have sold short exempt and must therefore locate. Let's also point out the utilization on AMC has been maxed out ever since February the 8th at 100, and it hasn't, even though more shares are going out on loan, the utilization remains capped at 100. And that doesn't mean that there's something illegal going on necessarily, but it does mean that all of the shares that are being located here are very, very difficult to find right now. Now, the cost to borrow, which is also a significant indicator of how difficult a stock is to borrow, we can see that the cost to borrow has been lifting consistently all throughout this time period up until late March, when AMC made its big move up to $34.33. And since it moved down, it kind of consolidated. It just went sideways for a while. But now the price of AMC, the cost to borrow fee of AMC, excuse me, is skyrocketing rapidly. Right now, the cost to borrow average looks low with 13%, but very soon we're going to see price action reflect the difficulty that it is to borrow. And this expense for shorts will be unsustainable at some point. So I don't want people to take everything that I've said in this video and just assume that I'm against AMC. What I'm trying to tell you is that you need to be realistic and look at data. You can't just jump into whatever somebody says on social media, and you also can't jump down someone's throat for what they say on social media. It's like, if you're subscribing to a theory that a stock has to go to a certain price level, what, just because some guy says so on Twitter, that's stupid. Don't do that, because for one, you're just falling into the same trap that 99% of retail traders fall into, where they make a bad decision based off of, we all make fun of Jim Cramer. You're doing the same thing that boomers do, just subscribing to whatever Jim Cramer says on Mad Money and just throwing money at a stock just because he says so. And he has a whole lot of theatrics, and so do people on YouTube. But here I am looking at data, trying to actually explain to you why Trey is right. Trey is right. $100,000, hell, even $1,000 is fucking fantasy. $1,000 is a hell of a lot more attainable for AMC, but there's the likelihood that we reach those prices, totally, totally unrealistic. You need to have realistic expectations. Even for a squeeze play, $100 is quite a lot for a stock to move. For a stock to move from $10 to $100 would be huge. I think that in AMC's case or in GameStop's case, those particular stocks can squeeze by 1,000% of their current value, and I think that that is possible. But that's because I have data to confirm or at least agree with the thesis. I don't just jump in. I don't just set a price and say as long as I don't sell, it'll get there one day. That's stupid. Don't do that. If you want to be in this game to make money, then you need to be realistic with yourself and understand that in order for somebody to sell something, in order for somebody, in order for you to sell your shares of AMC at $100,000, you got to find somebody willing to buy them at $100,000, and there is no man on earth that is willing to do that unless they have a gun to their head. So as we keep watching AMC's numbers rise and climb and get more and more ridiculous with time, I promise you that you will see price action reflect that, and AMC can absolutely move to new highs. It's totally within the realm of possibility, but don't just subscribe to a $100,000 theory, okay? Go get data, go and speak to professional traders who are actually looking at this every day and understand why this method of analysis works for stocks. If you're just subscribing to something because somebody says so on social media, you're 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 talking to a snake oil salesman, or you could be for all you know. Trust yourself. Educate yourself on this stuff. Take the time to understand it and invest in yourself that way, because plays like AMC might come once in a lifetime, but in order to build wealth, you need to go and find plays that will consistently make you money. And that's how you win at the stock market. That's how you build wealth, and that's how you win at investing in general. You find things that are undervalued, you buy them, and you wait until they gain the value and reach a price that reflects its true valuation. And then you sell it. You don't just throw money randomly into a stock and pray. That's what 99% of people do, and 99% of people get it wrong. If this was easy, everybody would do it and nobody would work again. That's just not how society and it's not how reality works. So I hope I don't I hope I don't have a brick thrown through my window for having made this video, but understand where I'm coming from, that I'm here to help people understand how this system works and understand and learn more about it, and I'm learning more about it every single day. So that's what I'm trying to bring to you. I'm trying to bring to you education and knowledge and resources so that you can give yourself an edge in the markets, and eventually retail can become the real whales. Thank you guys for watching. I really appreciate your time, and I'm going to go ahead and end it here. So hopefully I will see you later on this week, but in the meantime, have a hell of a time in the markets.